So we'll move into our last session now, the future of credit and credit information. So bringing us to a close with the last session, our own Neil Munroe, Deputy MD of BIIA. We have making their way to the stage Matt Gamser, who's CEO of SME Finance Forum, Jérôme Pezé, the CEO and founder of Tinubu Square, Cato Syversen, CEO of Creditsafe, Ben Elliott, CEO Asia Pacific of Experian, and Peter Villa, the COO of Schufa. Over to you, Neil.
Thank you. Because I'm running a conference, I always wanted the biggest panel. And I've got the biggest panel. There you go. There's some benefits in doing that. No, we pulled together the panel to finish this session off. When we were thinking about what we were going to do, we thought we were going to tell the story over the last couple of days around the whole, data analytics, AI, future risk management. So let's finish up by bringing it all together with some very senior executives from the industry, both from the business information and the consumer information side, from a variety of different organizations. And let's try and get the answer to this question. What is the future of credit information? I tried this, some of you may have been at an event, I ran an event for consumer credit reporting industry in India about a year ago, about this sort of time, and I tried that. And I got a lot of politically correct answers. We thought, well, we can't have that again, can we? Because otherwise you'll all get very badly rated on the feedback survey. So I thought, let's get a bit provocative. Let's find some people in the industry who are movers and shakers, who are very much involved in all of this. So that's why we have this esteemed panel today. Some of them like dressing, as you can tell. I was going to issue an email actually before we started to say let's dress to impress, but I gave up on that one. But they still dress to impress anyway. And I think Cato wins the prize for being the most suave. Well done.
I hate the attention.
That's not true, as we know. So really, and that's the way this panel is going to go, guys. Because I want some truth, and we all want some truth, and I'm sure you're all very keen to know what is going to happen. Are we living, in a world where it's just going to carry on? We've had this little impact of AI, we've had this little impact of fintech, but are they just going to go away, and is it all going to carry on as it is, and we're all going to continue to earn reasonable margins, or what's going to happen? And that's really what I'm throwing out to these guys, and I think we'll get quite a few different views. And I've asked them to look at it not just from consumer, but also business information, and that's why we have a good range here. And we've got a good global presence, I think. We've got companies here who are, in Asia Pacific, globally. I've also brought Matt along because those of you who have been listening will know that Matt's a very shy individual, doesn't have much to say. So, but we also thought Matt's involvement would be good because obviously he can talk very much from the SMEs. He's running that whole thing around trying to get SMEs access to finance that we and the business information industry are trying to support. So I'm trying to hopefully get both sides. So what I'm going to ask each of them to do is, and this might be difficult for CEOs, is an elevator pitch. But really just a few words about where they see the future of credit and credit information, get some themes going, and then we're going to bounce that around, and then we'll come out to the audience. And I really, really do want you not to be shy in this last event, because it's going to be very rare you'll get these sort of guys up on a stage again. So this is really your opportunity to grill them. And they're willing to be grilled. I know that much from the conversation we've had before. So, no more ado, I'll just start in order. Ben, nice shirt.
Thank you very much. I thought I'd dress up today because I heard Cato was going to dress up, and I arrived here and realised how underdone I am relative to him. So he's got better hair, a better suit. But look, if I think about the future that we see across the globe, I think it's fair to say there's going to be variances. And, I've heard lots of conversation the last couple of days about what it means in Asia Pacific relative to the US or the UK. What's very clear to us is, the credit industry, I think in Asia Pacific, is going to leapfrog a number of traditional models and traditional bureaus. And that's not to suggest that bureaus won't be relevant in the region. But I think they will play a lesser role in this region particularly than they've played in the US and the UK over time. And I think other models and more developed bureaus and different variances and partnerships will play a greater role.
Great. Thank you. Cato?
Well, I mean, it's a very conservative industry, this, isn't it? Especially when you look at business credit reports. I mean, there's not that much changing. I mean, we've been going for 22 years. We never sold one credit report. We always sold subscriptions. Because, I mean, with the structure that it's still there, I mean, where does a credit report begin and where does it end? You want to look at Barclays Group? You can spend thousands and days. So, you know, this is where I think where we started with being more like Netflix and Spotify. You know, that's going to explode. We don't want our customers to just credit check when they onboard. We want them to have fresh data in their prospect pool during the onboarding process, during, you know, the life cycle of the customer and debt collection. It's got to be fresh data all the time. This is why, you know, we are providing 210 million business credit reports this year. Then the registry in the US is 4 times larger than us, but we're still the world's most used because they can. So, and you talk about AI, and I tried to get an answer of how much data do you need. And it was a bit woolly, but it's okay. But if nothing else, the customer need to store their historic data as well, don't they? What did the customer look like when I started looking at them, pitching them, onboarding them? And this price level that is out there for credit reports is just ridiculous. We know nobody's, I hope so, running on IBM mainframe servers anymore. So, you know, it's a new time. And why on earth is this industry, business credit report, not growing when somebody says that data is the new oil? Because we're stagnant in the old set ways of doing it, isn't it?
Good. Excellent. I like that.
I do think during 2 years, the global average price per credit report is going to halve.
And I think that's very much a valid point. And I've said it several times. You know, is it going to be that? Is it going to be a lot less? You know, is it being impacted? And I think there are moves from the industry to do something about it. I do sense, in a way, and I say this in a provocative way, that it's consumer information driven at the moment. And I think the business information market is a bit sleepy.
Yeah.
And needs to do something about it.
Obviously happy about it.
Yeah. But I think that's the point. Let's pick that up later. I think that's a good point. Matt, from looking at it from the other side perspective.
Sure.
You've got less than 30 minutes.
No. No. Look, and I went with the man of the people today compared to my tie yesterday because I'm supposed to be the man of the people, and I can't compete on hair. So, but I completely agree with this trend. The idea that you're the holder of a mass of data like the IBM mainframe is dead. The firms in Asia in particular, we're seeing the rise of new entities that control masses of data that's completely outside, that's really relevant for the vast majority of companies in this region who are the SMEs, who don't exist even when there are registries because they haven't had a formal financial relationship with their sectors. And so the idea that you're going to get more data than Alibaba, than Lazada, than big buyers, big sellers like Unilever or Procter & Gamble on the sell side, or big buyers like Ecom, Olam, Armajar, that's not going to happen. But those firms there's still plenty of future. If you take the history of being able to do analytics efficiently, responsibly, that reinventing the industry as a partner of institutions that want to do different services for businesses in the region, especially those that want to help more and more companies trade across borders, because historically we know that companies that trade across borders are companies that tend to grow faster and create more jobs, which is, after all, at least from my World Bank hat, what we really care about, right? So that is where we could be going. That's where the data is existing for more and more firms. So inclusion is more possible, more affordable today than ever before, but not in the old model.
So this false hope that we're all going to collect more and more data in the current infrastructure, I think we're getting a trend here that it's just you know.
I'm just going to keep building my internal mainframe structure, and it's going to be even better than it ever was before, and I'm going to sell you a subscription. I completely agree. That's not going to work. But if I can, just like IBM, reinvent myself as a more of a management consulting, problem solving, you know, then I think there's abundant future for the industry.
I commonly hear this phrase, you know, that fintechs will die. These other guys, you know, they'll get over-regulated. We're the trusted source, so bring the data to us. And I think that's a little bit living in cloud cuckoo land, isn't it? A little bit, quite frankly. Yeah, there's an element of trust in the current structure, but it's, you know, these guys don't really necessarily see that as a USP anymore. But John, you look at it, I know, from a slightly different perspective, but.
Yes, my perspective is a little bit different. Basically, what we do ourselves, we provide the ERP, the system for credit insurers to operate. And around the globe to a number of them. Just to give you an idea, there are probably today 100,000 insured which are doing trading and through our systems. And probably since the beginning of the year, $500 billion transaction were processed, to give you an idea. So this is the perspective of the trade credit insurer. So clearly, we, the credit insurers and ourselves, we invested on data analytics, the ability to capture data, to store data, to utilize data over time, and to have access to information providers. I would do two remarks. Of course, we invest in technology, and our clients together with us invest in technology, AI, and the ability to replicate what was done before by a scoring system, to replicate it with AI, ability to replicate the analysis done by a risk underwriter and studying the propagation risk between threat sectors within a country and so on. Okay, everybody invests in that, but there are also things which are very important. It is the fact that to capture risk now, you have to increase the scope of what you are considering. It is not only the buyer, not only the counterpart, but it's also the profile of the seller, the profile of the transaction. All those items are critical. And finally, I would just add one thing, is that beyond all those investments, all this technology, after, I would say, more than 10 years of very low risks, we are probably today at the point of the higher potential volatility of the credit risk, at least in the trade credit risks. There are significant signals, and all the industry is reconsidering if really, beyond this technology investment, this database investment, there is different approach to be capable to react and anticipate actions versus this evolution of the risks. And if you like, I could elaborate on that, but the signals are very strong today.
Thank you. I think that's an interesting point, because if we go back to the last financial recession, you know, in a way, you know, there was a lot of, people like FICO got really beaten up by that with the scores. Whether you argue that's right or not, we'll not go there, but you know, I think the industry actually got away quite lightly, because it probably wasn't predicting and wasn't coming up with this. And I think that, you know, next time it happens, there's going to be a lot of scrutiny about that, and it's going to create another push on. I mean, we know fintech and other stuff came out of the last recession because of the lack of, you know, what was being done. Well, my view is that anyway. So I think we might see that again. So it's a bit of it's a good warning, I think, that, you know, don't get your act together, guys. You're going to get another good kicking next time around from new players. So thank you for that. Peter.
I have another view, because I'm working mainly in consumer information. We have a B2B database as well, and we have similar challenges. And it's changed the industry, and I'm working mainly in Germany with the German market. It's very exciting, because it's tough to have legacy as we have. We've been in the market since 1927, but it's the challenge we have, and the opportunities, of course, what can we do for the future? And what we recognize in our companies, we have to invest, we have to do something. You have to invest in the infrastructure you have in the company, you have to be prepared to handle the legal situation you have in the country. And one of the advantages thing to be in Germany is that to be in an extremely regulated market, we could cope with the new legislation that came. It means we have to work in this kind of boundary we have. We don't have it in other markets. You probably don't have it all over. But what we did, and I think it's very important, is to really see the challenge we have for new players like the fintechs, but not only the fintechs, the other companies as well, trying to go to a quite big market like Germany. And what we have done is that we have a look at, can we make investment? We did. We bought a fintech company this year. We tried to widen the scope, and we know it will be more activities in the German market. That's the reason you met my colleague, Dr. Castelletti, yesterday, and we tried to invest in different technology, but that's not enough. We know that. And we know we will have a challenge in the coming years, so we are prepared, and I think it's an interesting business. I think in the B2B side, as we are a small player for the moment, I know it's not a challenge on the consumer side, but we see it very positively. We are prepared to handle the situation, otherwise we wouldn't sit here, of course. And in that sense, I don't see it as so negative as my colleague in the pricing and other things as well. I think we will have a price development as well. It will be a pressure on the prices, but the services we can offer be much more than we have today. That's another view than you have, guys.
Okay, thank you. So just to summarize then, data is not everything, isn't going to be everything. Analytics is one possible solution. The model, therefore, becomes one of an organization that really just analyzes data and pulls data in from different sources. So if you look at some fintechs, that's exactly what they're doing, isn't it? They're taking APIs and other stuff like that. So is that where you're going?
Yeah, absolutely.
How are you going to get your money back on all that data, and are you just going to let that data stagnate, or are you going to...
There's PSD2 and other things coming in. So there's, you have to compete better. You've got to give a better value proposition. You can't charge £70 for an international report forever. People's going to do this with compliance and other things. So yes, integration. In a lot of cases, there are more and more customers that buy the whole bulk. I don't care. They got a data warehouse, you play with it. So you've got to be more pragmatic of the value of what we're offering in this. And just push usage.
Yeah, I agree with that. I think what's playing out, if you look at the consumer space, in fact, if you look at most of the industry, prices are coming down. We're expecting them to come down further. I agree with your position about where prices will be in the next 2 years. There's no doubt core credit report pricing in the BI space, I think probably half, maybe even less, right? The question is, how does the industry respond to that? The industry responds to that by being much more innovative, by bringing new products, by bringing new solutions to the market that help both SMEs, that help the banks and other organisations make decisions quicker. And so, we're seeing this in the consumer space in places like India, where we've got a credit bureau. The price for a credit report there is pennies, right? You get next to nothing. And under the PCR, proposed PCR legislation, you could get absolutely nothing. But it's the value-added products, the additional pieces that you provide, which long-term will provide the value. And I think organisations that aren't innovating on the other products, they're going to struggle.
And as you've heard, B2B, when I talk to the bankers in our network as well, they're all saying B2B. We have to do more on B2B because there's just, and why do they say that, especially thinking about a region like Asia? Despite US-China trade wars, do we really think supply chains are going to get shorter? No, they're going to, and the tail is going to get longer. And we're dealing with a fundamental infrastructure that's ancient. Our cross-border money transfer is using telex technology from the 1920s. Our documentary trade finance is using 14th century technology. This has got to change in the next few years. So I agree, if you can, another opportunity is being part of the platform that replaces this. And then you can not only have business opportunities, but you can further decrease risks, because as we heard yesterday from numerous examples, if I'm running the platform, you're not going to cross me as an SME, despite SME's inherent nefariousness, right? Because I need to stay on the platform. It's not just my source of finance, it's my source of business connection. And if I can be the platform, then I can get I can find ways to get more business and minimize my risk of people crossing me and minimize my risk of people lying to me, because if I drop you, you've lost much more than one deal. You've lost your future deal flow. So where does this go? How do you plug in? I mean, if I knew that, I'd be a very rich investor today. Do you go with R3/4, Marco Polo, Ethereum? I mean, for the way we're going to create these new structures that are going to link the chains, wow. I mean, that's...
But just tell me then.
There is if I may, there is a paradox. There is the fact that everybody, it's a buzzword, speaks about blockchain and artificial intelligence. But on the other hand, when you look at the way transactions are processed, notably within banks, I'm very frequently amazed. It's basically the same way, if you look at the way letters of credit are handled, same way I did when I started my career 40 years ago with BNP Paribas. They do more or less the same. Which means that the digitalization of those basic processes have not yet actually been implemented. We are far behind. So on the other hand, indeed, for example, we did the first issuance and management of a bid bond and performance bond on the blockchain with a syndication of reinsurers. That attracted attention by many banks. But in terms of cultural interest, but it's far from this being implemented in practice, while they have a gap in terms of basic processes being adjusted and changed. The digitalization is far from being done in all these organizations.
But I can only be interested in that way because if I make a big commitment, which is likely as first mover to have a lot of problems and expenses, all I'm going to do is open the way for my competitors to step over my body and win out, right? So unless, as an industry, for example, you could do some coordinated movement, like when the Visa card was created, for example, when there was a coordinated move into a common standard for plastic cards, no individual financial institution can make that commitment, which then would drive the market forward. So now we have a proliferation of experiment-level ways of replacing these old non-digital ways, but no one's gaining enough momentum. So how do we get through that?
So I suppose, if I summarize that in a way, it's sort of saying because the infrastructure's there and it's so rigid and it's such a big chain, all of this fintech influence that's trying to bite off bits isn't really going to go anywhere, is it? Because unless you get a fundamental cultural shift in some of this behavior and recognition it has to change, this is why the fintech thing, I think, would come up.
With the exception of the tech fins, the Amazons, the Alibabas, they could come in and just displace everybody. If the traditional industry continues in this way, you're just opening the door for them to come in and do it, take over and add finance to the other things that they do.
I would not be necessarily that pessimistic everywhere. I would say that in the credit insurance, we see that credit insurance is basically a credit insurer charge on the trade credit transaction, 15 basic points to secure a transaction. So it has to be very cost effective and risk has to be very well assessed. There are a number of credit insurers that indeed took the journey of a digital transformation. And they are much more advanced than most of the banks, at least on the B2B side. And I don't want to release here necessarily names, but they have done the move.
Right.
Which makes me relatively optimistic for the future in that perspective. Now, innovation, what is interesting with AI, for example. When you study one of the risks for a credit insurer, which is the propagation risk, which is the impact of a failure somewhere on a trade sector, on a country, and so on. Where the innovation come from? Not necessarily from the credit industry. It comes from the totally different industry. It could be pharmaceutical industry, it could be food industry, food processing industry, where for a longer time, they are studying this type of propagation risk. And basically, the methodology and the approach is basically the same. So which means that we have to perceive our industry, not in isolation, not in silo, but in a more open way, which is we are part of an ecosystem which is larger and larger, more and more extended.
I understand that. Let me come back to these two guys, give you guys a break.
Look, I think what's really interesting that you talk about our fintechs just chipping away at the edges. How do we get a fundamental shift? You know, most of you are out there talking to leaders in banks and telcos and those sorts of people. You know, the two big problems that the banks particularly are trying to solve is the cost of compliance and the cost of technology. So a lot of other things don't get prioritised. And when you look at for any of you who've worked in banks, I certainly spent most of my career in banking, you know, they've got these spaghetti systems that, you know, we can go in, or fintechs can go in with great software solutions. It's not so much the cost of the software solution, it's the cost of the integration effort. So a $2 million project that we might pitch ends up being a $10 million project that they've got to do on the back end. So I do, if I look 5 years ahead, I do see a world where a collection of fintechs, a gaggle, I don't know what you call a collection of fintechs, but a group of fintechs get together with most likely a regulator and bring out effectively a core banking platform that you can drop in. And I think some of the banks will look at that and say, that is a better proposition than having to do this ourselves. And when that happens, I think it'll get momentum. So fast forward 5 or 10 years, I don't think you'll see the type of technology teams in banks. I think it'll all shift and a lot of it will be outsourced to groups who can collectively maintain this.
Interesting. Cato, any views?
Yeah, I mean, I'm very optimistic. I'm not worried at all because the need for our data is still going to be there. You know, whether you're in a blockchain, you do want to know if they're going to pay their bills. Mm-hmm. And, you know, we got massive growth in compliance. And it's not just the ones that are regulated, it's also the ones that just have a corporate social responsibility, isn't it?
Yeah.
That speaks beautifully with our data. But it's all about the data. You've got to have global data. Because in a blockchain, all that, it will be international, wouldn't it? So, I mean, you shouldn't go here and try to sell your data. You should go here and try to collaborate, competition. Because if we can make our data more sexy, accept that the price is going to just drop, but the usage is going to explode to outweigh this. That's the way forward.
Well, and this gets back to what I was saying before. It's not the possession of data. This industry's comparative advantage is its years of understanding how to responsibly analyze data and gain the right sort of conclusions. What I see often in some of the new fintechs, especially the analytics ones, is because they don't have enough background working in the financial sector. They grew up in engineering and mathematics and things like that. They, like engineers in the old days when we first had VisiCalc, you know, engineers were the first ones that learned how to misuse that to get the result you wanted because, I can change this variable, and what that means in real life, who cares? I just got the right answer, right? And the same thing is happening in fintech. But this industry has a tradition of, you know, understanding the principles of analytics and also the responsibility of analytics and using that in cooperation with some of these new entities who are very clever and who may bring in new data as sources could yield a lot of opportunities. So don't get me wrong. I mean, I'm talking about threats from the tech fins and things, but overall, I still think there's abundant opportunity for this sector. But it's just like IBM realizing it's not those mainframe computers. It's your capability to be smart and analytical that's your strength. It's exactly the same lesson for this industry. It's not your data reservoir. It's your capacity about how to manipulate and efficiently and responsibly use data that's the strength. And if you can build on that, there's endless possibility.
Okay. I mean, Peter, you're more regional, obviously. Primarily, obviously, in Germany. I mean, it's interesting perspective. When you hear this, how do you look at that? Because you're in a sort of a different type of setup, really, aren't you? I mean, I know you're owned by the banks and all the rest of it. I mean, what are I know you can't say too much about them, but I mean, what are your banks wanting of you? I mean, are they wanting this sort of more data, or are they wanting more analytics from you? Where are they going?
It's a very relevant question. It's a very interesting discussion as well. Sorry. I think that if you look at data and fintechs, we have an issue in all markets. I mean, a lot of fintechs come to a market like Germany. It's a great market. It's a lot of possibilities. They underestimate the legislation in many cases. They don't understand it. They underestimate the relation we have with customers since years. I mean, we have the interfaces. We understand how to handle this customer. So they are a threat, but they are open our eyes to many things. I mean, we see this kind of environment as a new possibility. And I think if you look at the owners we have, I mean, Schufa is owned by the banks in Germany. And that's a fantastic situation to have because it's very stable. But of course, my owners have some issues, as you know. It means we have to think about how can we handle that future. We cannot live on transactional business like we did before. We have to see, can we solve the problem our owners has? But not only the owners, I mean, even if I have bank as owners in Germany, we have 10,000 customers over all industry in B2B. And we have 2.5 million private consumers customers as well. So it's a very mixture we have. I think technology is one issue we have to take a look at. But to understand the consumer needs is something that's even more important. And I know that you always say it's very important to have the understanding that the data belongs to the consumers, and we have to accept that. What we try to do is look at how it's possible to have interaction with the consumer in the job market, have services where they can react with us, have response with this kind of data. We try to think about the next step is to combine data as well. We have the biggest personal database in Germany together with the B2B database. And I agree with Cato, we have to make cooperation with each other. I mean, I cover Germany right now, and I need to have cooperation with others if I want to cover other markets. And we have that in a small context. As Neil, as you know, with Association Access, we have 12 countries. So I think it's a challenge. It's really a challenge, right? It's very dark right now for you guys.
It's been a long session.
We just went on the stage.
This is where we crack open the whiskey.
Just a quick one. So for 20 years, I've been waiting for the digital revolution because, taking on a big customer, it always stopped with the IT department, doesn't it? But now there is a change, isn't it? Yeah. If you're coming in with a sexy, documentation of not XML, but SOAP, 140 countries in one format, and we had customers have been up and going in 3 hours. This would have taken a year in the past. Yeah. So this is changing. All of a sudden, things are starting to go quicker.
And you're meeting, I suppose, what Ben, you were saying, that sort of efficiency thing, aren't you? You're meeting that need. Yeah. Yeah, I appreciate it. Let me just explore this concept of data ownership and this sort of, there's a lot of talk around the fact, and I'm not sure it's true or not, and I'd like your view around, consumers now own and manage their data more, and businesses will own and manage their data more. I see some of it in consumer. I don't see very much of it in the SME sort of small business space, but there's a lot of initiatives out there trying to push that, whether they're regulatory or whatever. I don't know, do you guys see it as just a, bit of tinkering, or is it a serious move? And is it really going to make your business model change?
Look, I think for us, there was a good distinction made earlier between data ownership and data access. I don't think you need to own data. You need to be in an ecosystem that has access to that data, that is secured, that allows people to make really good decisions. And if we step back from all of this, at the end of the day, there's a consumer, whether that's a consumer or an SME or whatever, they're the ones that we're serving here, right? And so we've got to figure out as an industry, how do you get efficiency, better outcomes, better pricing, whatever it might be to that end consumer. And I say that in the context of SMEs as well. I think if we look at it that way, then data ownership becomes much less important. Mm-hmm. And I completely agree with Cato. This is, it would be hugely arrogant of any organisation to believe they can do it all themselves. I think that's why you are starting to see a lot more, cooperation, a lot more discussions between organisations to try and solve these problems.
If we look at this from the SME's total world, especially SMEs that are trading across borders, when I talk to people like DHL or FedEx, and you say, what's the biggest change in your business in the last 10 years? They say things like, their CEOs say, 10 years ago, I would have told you my customers, the Maersk, and the shipping company, the airline. Today, my customer is the SME. So and the statement you made, I completely agree with it, but 10 years ago, I don't think you would have heard that. You would have heard my customer is the financial industry, whether it's the bank or the securities company or whatever. And so how do we take on that change, and how do we operate in an environment where really we can't, because at the retail financing level, they can't sit back and wait for the SME to arrive with them with all the information that's needed so that they can have a low cost of serving them. You have to proactively help that SME to enter a digital age so that the data is more available. So what's the role of the analytics companies in that equation? How does that change your role, the skills you need? I think these are the questions that need to be being asked, because the people on the other side of the ecosystem that are handling the commerce side as opposed to the finance side, they've already changed their views. They're already in a different world where they see their position as different. So the finance side has to make a similar leap.
To a large extent, we are writing public data, aren't we? It's the company's house and those things, and really, they are the source. But I still believe that in the future, the customer is going to be more like a partner, talking payment data, ledgers. This ties in with us giving enough back. We got to go much further because it's a pain for them. They get queries, there's GDPR concerns. But if we're willing to give enough back, I think we can get further.
It's interesting, this extra payments and this sort of partnership approach rather than a customer-supplier, isn't it? It's it's a way of embedding as well, isn't it? Which is
But it's also hot data. You're on the pulse, aren't you?
Yeah. And I think this sorry, John, this whole area of data and this extra data, and I'd be intrigued later to come back to that and like how the hell are you going to deal with that? There's so we'll come back. But John, please.
I just wanted to make a remark on one thing. More and more players of the credit insurance industry are considering sharing information on an anonymous basis, which means that the information could be provided on a data lake by different members, and then using data analytics tools and artificial intelligence, you can utilize this data. You can then develop analysis of it and then arrive to, for example, on propagation risks or on the risk profile to develop intelligence, which means that it's a change from the past, which means that everybody is highly concerned by data protection and so on. That's one of the solutions, to at least in terms of in research and in developing a new approach. That's one way to do it, which doesn't mean that, of course, when you take a decision, you didn't need to individualize when you take the decision, but based on the model developed on an anonymous basis.
Very helpful. Peter?
I think something analytics, I think it's go for B2B and B2C as well. As we started to look at e-commerce in Germany, Schufa is traditionally pooling database. You have to, if you want to have data, you have to deliver data. And the thing we had, if you looked at the big players now in the e-commerce area, they don't really speak to each other, and it's very hard to get into pool. And we tried very hard and we succeeded, and that was one thing we could say, if you can get the industry to work together, you have a new role as a credit information company, and we had. It is not a pricing, I know. In this case, we discuss a much lower price. We talk about volume, when you can work with the customers like that. And I think we have to step up and make more analytical kind of products, because if you're too low in the value chain, as we maybe have been at Schufa with transactional business, it's very sexy, it's very sticky, it's very good, but in the long run, we have to deliver more in B2C as well as B2B. It's something we're working very, very hard. And I think you can always, if you show the benefit for customer in e-commerce, whatever it is, a B2B company who has B2C in the next run, I think it makes sense. And we've been able to compete with completely new companies we never had before, and to go in this area with these traditional things we had, pooling data, quality, knowing the legal stuff, having good backbone, and things like that is something we have to work with. Probably the same for you guys in the B2B area as well.
Sharing is caring.
Yeah, it is.
Well, and the other thing is that in a region like this, You've got countries of different size with different size markets. You've got financial institutions of very great variation in size. And you've got new players coming into finance that weren't financial institutions of varying size. It presents a problem, but in the same way you're saying, it's also an enormous opportunity. And it will be very interesting to see, for example, how a platform like the ASEAN API Exchange, APIX, which does offer this chance to pool data and use anonymized data to help accelerate learning and new products in the region, to what extent it really is taken up. And the extent to which companies like yours could contribute to platforms like that taking off are questions I think you should be asking. Yeah. Because they need your experience showing that you can responsibly take that sort of data and not betray individual corporate secrets in using it to further knowledge.
One of the interests of this platform and what they can provide is the same as the blockchain. It is, as I mentioned earlier, it's not only information regarding the buyer and the B2B counterpart. It is the profile of the transaction, the way the transaction is structured. It is the profile of the seller, and knowing very well in this industry that there is an impact, strong impact on the bargaining power between the supplier and the buyer, the positioning, strategic positioning in the value chain. All those things will play a major role in the future, and will probably be drivers for also the industry overall to change and to take a different perspective and to go more for integration and collaboration with other players. Not thinking ecosystem in isolation.
I agree. Thank you very much. I'm going to not do the audience out the opportunity to bounce some ideas around, and if they all need their lunch or suddenly the crew drop the lights and we can't see who the hell we're talking to, let's go out and see if we can spur some questions in. As I said earlier, it would be remiss if you can't ask this panel some questions, as you've obviously already heard. We've got some very strong opinions, and I appreciate that, gentlemen, and it's really what I wanted, so thank you very much. And I'd like to tease some of those out. So, any questions from anybody? Or are we suffering lunch need? Thank you, Phil.
So first of all, good to see a lot of my colleagues from my previous industry. And Cato, I guess you're part of it now, aren't you? No longer a disruptor at the end of the day. One thing I was interested in as people were talking was an absence of the value of brand, and also about the ability to distribute at scale. And I'd be interested to hear panelists' views on that, and whether you believe that is a core capability that'll continue to mean the big players will thrive, or whether you think that actually that's not important.
Please.
Yeah, I mean, in the high end, for sure, it's there. But obviously, we're living in a world where the Ubers are coming in, the Deliveroos, the Netflix, the Spotify. There's more and more, willingness to accept that somebody can come from nowhere and be brilliant than ever before, isn't it? Which we can feel now that it probably is less need for a brand compared to 10 years ago. It's more what you can do and how you do it. So, yeah, we are still being seen as a bit of a maverick, but, the fintechs love that. But the banks is a bit harder. So I only got 5% market share anyway, so.
I can't imagine why you'd be seen as a maverick.
Let's go to a brand then.
Yeah, look, Phil, I think brand's important, but I do agree that, there's been plenty of examples, even with our own organisation, where we had a strong brand in a particular market but have been disrupted. So I wouldn't say that's everything. On the point of distribution, though, what we're seeing is a really strong connection between that intersection between fintechs and great ideas and then how they distribute. And so when we partner with fintechs, it's largely because they're coming to us saying, hey, we got this really great idea, but we know it's going to be very difficult to distribute. And that's the biggest challenge for these guys, right? Is they got this great idea, but they don't have connections necessarily into the big organisations. But scaling is going to cost them a lot of money, and that means they're burning a lot of the capital they've got sitting there. And so I think there is an intersection there.
I will agree. For that, reason fintechs come and talk to us is because of the spread we have and the brand. And our really combination we have, as a reasonably small company compared to yours, people come to us and say, okay, that's something that's very, very strong. And brand recognition we have in Germany is so strong, it would take some time to build it. But I agree with you as well. There are coming new ones. You're one of the companies coming out of one as well. It will change, but I think it's a possibility we have to look at. It will be competition. We have brands and we have strong brands, and you can use them, you can utilize them now. And I think it's absolutely value, for sure. It will take some money and some effort to build the brand we have in Germany.
Look at people we've had here. Look at a company like Grab, which is becoming an increasingly important financial force in markets like Thailand, Malaysia, Singapore, Indonesia. What do you think the regulator, for now it's still too new, so the regulators are, they're not really concerned, but they have to think going forward about what street cred they have and whether it's who they hire in or who they partner with to show that they're managing risk as they get bigger is going to be important. That's an opportunity. Brand is not going away. And the same would be true as Alibaba with its investments in the e-commerce marketplaces is increasingly coming into all regions of the world, and same with Amazon. And
it's an interesting point, isn't it? I'll come to you in a minute, Ben, but it's this sort of it's that brand moving. Grab is a very strong brand and it's developed. Amazon's a very strong brand, it's done that. And therefore it grabs, sorry about this, Grab. It takes people with its brand, and it's very easy then to morph into other services because it's got that trust, isn't it? And it's in a way, this industry has probably failed, in my mind, on that trust element.
But the financial sector regulators, that brand by itself is not enough for them. You have that comparative advantage for now.
Yeah, exactly.
Yeah, so I think the Grab example is a very good one. And there's some self-interest here because we've invested in Grab and we are partnering with Grab, but for that exact reason.
But, exactly. I rest my case.
When we talk to Grab, it's sort of like, hey, look, we've got all these great ideas, but you guys have walked that road. You know how this is going to work. You've probably got a better sense of where regulation's heading than we do. But hey, we've got all of this expertise on this side. We have this big platform. We've got big plans. And so that is a great example of where we have to partner with these players rather than thinking that's just another competitor.
I believe the loyalty to a brand or a service remain. Nevertheless, it's just a matter of example. 10 years ago, our clients, credit insurers, asked for a XML link with 3 or 4 information providers. Today, they want API with 15 or 25 of them. And they want to be capable to switch from one to the other because they believe that the sustainability of the service is not necessarily there. They want to be very mobile. Nevertheless, there are some brands that manage, you are a good example, to sustainably position themselves. But that is very demanding for the company itself.
Yeah,
I agree.
And I want one group with their niche expertise to handle my trade credit. I might need another one for my investment credit. Just looking in the SME space, I may need another for my working capital. I want the capacity to work with different companies that have shown they have good angles, as opposed to I'm just doing all of this in-house, which is the way you used to do it in the big banks.
And that's flexibility within the demand side, isn't it?
Yeah.
And it's only come about probably because of the digitalization. They would never have done that if it was a paper-based thing. It would have been too. Cato.
Yeah, there is also a risk here that, Encompass and True Narrative and these platforms can sit in the middle and own the customer unless we react and become, platforms ourselves. And we also, I'd be happy to be number 3 and let Dun & Bradstreet be number 1 if we could play.
or there may be codes about how you practice within the platforms. This is another area that, especially as an association, might be well worth attention, and equally should be worth the attention of something like the International Committee on Credit Reporting, right? Because the industry is evolving. What's the right relationship in the future? Because Amazon's not going to go away, Alibaba's not going to go away, Facebook's not going to go away. They're just going to get more diversified. I mean, they might get broken up, but it's still all going to be there, and you have to deal with it.
Thank you. I think we had another question. Stefan?
Yeah, to that point, how do you see the latest development around Alipay offering credit?
Sorry, just 1 second, Stefan. The mic's a bit weak. Can we just get that mic up a bit?
Can you hear me better now?
Yes, thank you.
So how do you see the latest developments about Alipay, for instance, offering credit, those big tech going into this space? What do you think the future will look like in 5 to 10 years?
On the fintech in the credit space, yes?
The answer is different in China and outside of China, because in China, it's already done, right? I mean, you've got 3 virtual banks in the 3 tech giants, and there's still an ongoing evolution, but they're not only offering credit, they're offering insurance, wealth management. They're just as, they're ICBC, except they're growing faster and they're serving the base, whereas ICBC serves the big boys and the government, right? I mean, if I'm being very crude. But outside, they know they can't control the data. That's their power in China. They can't acquire the same. So what I see them doing is they're trying to partner. They're trying to figure out who they should be aligning with, whether as an investor or just as a service provider, because they don't see themselves as acquiring the same status outside of China. The same is true to some extent, whether it's PayPal, Amazon, Facebook, Google. They're all asking the same questions as they go outside North America to new markets.
What is important is also to consider the cost of financing. When you need to pay 15 or 20% per year to be financed when you are an SME, indeed, there is a cost of risk which is there, which enable you indeed to use basic data, but try to replicate the model of Alibaba in Europe or in the US, where you have to fight for 200 basis points in terms of margin for the risk. The picture is totally different. The ability to replicate the model is very limited, just because of that, because of the access and the cost of funding and the ability of product to finance yourself when you are operating in Europe or in the US.
Any other questions? Getting into lunchtime, obviously. Okay, well, we've got about 7 minutes left, so let's bash it around a bit, guys, because I'm sure we can carry on. Yeah. Oh, sorry.
Joe has a question.
Sorry, Joachim. I'll get the sack for that.
Thank you very much. I think you guys are not radical enough, because what happened to our industry in the last 10 years because of, as Stefan said, the financial crisis, it was a catalyst. Everybody got chastised, FICO, the rating agencies, and something new was created, and in many areas, identity crept up, etc. I think there are a couple of forces underway which actually could mean the end of the credit bureau. Matter of fact, there's somebody in the room here who said at one of the world conferences of consumer credit, he used this term punctuated equilibrium, and he showed a slide with the meteor hitting the Earth. And, well, that was the end of the dinosaurs, but actually I was intrigued by that concept, and I looked it up, what it meant. And it was a theory by 2 professors who said, well, it didn't wipe out everything because it caused a bifurcation. Yeah, many species got extinct, but new hybrids arrived. And I'm waiting for the hybrids. Now, if you think about what's happening with this ludicrousy of the Central Bank of Europe creating a credit bureau, and the Indians follow suit, that is something which you need to think about. Possibly a hybrid will come out of it, and you can see the evidence with certain members of the industry already investing in fintech. And that reminds me what I said to my DMB masters 30 years ago: put your money where your mouth is. Credit insurers didn't do that. Well, they put money down, but they didn't actually finance a transaction. So we are entering a phase where actually we're getting into the money stream. And the money stream actually creates information, experience, and it's experience we need. So
are you dinosaurs or not? Is that the question, may I ask?
Well, anyway, I'm becoming like the Indians. They like preamble. So is there any idea, or what is your perception, what actually could happen to the industry with a traumatic event?
Thank you. Let me and that's a great question, and one that we are trying to get to an answer to. And it's almost like, are you guys going to exist in 5 years' time? And if you are, are you going to be one of the few dinosaurs left and on the way out, or are you? And what shape are you going to be? Are you going to be, morphing into something? We probably won't have a meteorite, hopefully, but there are lots of, sort of hypothetical meteorites around. So, that's one thing I want to try and close with in a way. We've got 4 minutes, so where will you be? Now I know that's a competitive thing in a way, but generally, where would organisations like you do you think will be in 5 years' time? Are you going to be the same? Maybe slightly different? Are you going to be radical? Because we could have probably asked this 5 years ago, and we'd have probably got, we're going to be radical. We're 5 years hence, and we're not really. So I'd be interested to see if the message has got home. Okay?
Yeah, sure. Look, I wouldn't say it's going to be radically different, but it will be very different. And I think the reason it will be is, and Cato and I agreed on this earlier, if you just say half of the revenue stream for credit reports disappears, then you can't have the infrastructure and the cost without building out better products and solutions. And I know that's a bit of a cliche to say, just build out better products. The industry will change completely. I think there'll be more players rather than less. So your point about, hey, there'll be a few dinosaurs. There'll be some big players, but I think there'll be a lot more players in this space, but there'll be niches, and they'll be doing really well. I think Cato's point about having global data is really important, because it's going to be very difficult to operate a single bureau in a single market and not be connected in the ecosystem.
Good. Thank you.
As I said, I'm not worried. I'm just excited. But I see, the whole API talking to the customer in a different way. They will send data with their search. They will have decision engines that will do workflows where we will make companies more efficient. We won't be selling on price for doing credit checks. We will be building solutions where we'll completely change how they work.
So that's almost moving the business information.
I don't like to use the F word, but fintech, yes.
Yeah.
We will become fintech.
It's also moving the business information world into very much what the consumer world has been doing.
Yeah.
Mm-hmm. And there is a lot more innovation in that space.
Yes, absolutely, I agree.
I mean, I'm not in the industry, so but
always
from the SME side, they want the same sort of seamless experience that a consumer has when they go to Amazon or Alibaba, where they can deal with everything they want to do. And so that there's an infrastructure that's created out there where it's easy for them to migrate to a digital world, and it's safe. And that's the other party we haven't talked about. In many cases, I have lots of obvious benefits in the digital world, but in my host country, I'm not sure the government is giving me obvious benefits. In fact, it's giving me some risks from the SME point. So you need a combination of the technological ability to have these platforms, and you need to be using them also in changing supervision and regulation to make that more predictable and manageable for the SME, so that my downside risks of putting my head over the parapet by being digital and government can see me aren't aren't outweighed by the negative impact of, okay, now I have to deal with these people and they're too unpredictable and, to be polite, and therefore I'm not going to do it. So I'm not going to enable the expansion of inclusion, and I'm not going to enable the industry to have better data on me because I don't want government to have better data on me. So somehow that has to work in sync.
And I appreciate the regulatory thing. It was on our list of things to talk about, but we've got carried away with other stuff. So maybe we can spend another session on that one at another time. But John.
Yeah, we digitalize an industry, which is the surety and credit insurance industry. So today, $500 billion transactions are processed through our system. In 5 years' time, it will be more than $2 trillion. Why? It's because more and more players are going to take the route of digitalization, and the industry is growing by 5% per year overall. And the volume of transactions covered by the industry is growing by 7.5% per year. So mechanically, the role will be longer, will be wider and wider, with a cost of risk which will be reduced years after years. The cost of the product will be reduced years after years, thanks to indeed intelligence, knowledge, and ability to assess the risks.
Peter?
I can ask the question. We will be a bird. I mean, not a dinosaur. I think that we, another ecosystem, and we will deliver our services in other ecosystems. We do it already today. We work with American companies, as you know, from Silicon Valley, and I think we have to adopt to that. It will be changed. We will sit here in 5 years. We will have other companies in our home. I'm sure about that. But we will be there.
Good. Thank you for that, gentlemen. Go back to our equation. Data plus analytics plus AI equals, the future of risk management. I was trying to if I had a graphic, I'd probably do it. I think the data, if you did a is it going up, is it going down, where is it going? We're probably with a little bit of a down arrow on that. I think the analytics is certainly on the up arrow and an increase. I think the AI thing, I get a sense, is a bit of the jury's out, so I'll put that as is at the moment. So that's just my way as an ex-economist trying to rationalize it. But please thank my panel for a very insightful view of the future. I hope you've learned a lot from it. I certainly have, and continue to do so. I know they'll all be around over lunch, so if you want to talk to them, please do. But thank you, gentlemen.